Rocket Money is what we call the app now, I'm biased, but I really think it's the best personal finance app out there in terms of just really giving you a comprehensive set of tools to understand your money and do better with it. When I started building it, I tried all these other budgeting apps, and they would do things like give me an alert and say, you spent too much at dinner last night, you need to come back, right? And I always hated that. Like, not only did I hate it, but it wasn't helpful. Like, I know what I spent on dinner last night. I was there. I signed the check. Like, this is not helpful, right? So I wanted to create like the finance app for me that would make my life easier and put money back in my pocket, but not ask me to not go out to dinner or to sacrifice my lifestyle. So I said, what would be awesome is if this could lower my Comcast bill or my cable bill or lower my cell phone bill, right? And so now, after you get rid of your subscriptions or after you sign up, the app looks at your cell phone, your cable bill, whatever other bills you have, and says, hey, you know what? Like, we see people similar to you paying less for the same service. And that may be because, for instance, you got your cell phone 2 years ago and a better plan is available, but you just haven't switched to it, right? And it's got more minutes and more data and it just costs less. So, or maybe you've been there for 2 years and we happen to know that phone company has a 2-year loyalty discount that they'll give you if you argue with them over it, right? So it'll identify your negotiable bills, and if you give us permission, we'll get in touch with all those providers and lower your bills. If you look at the economics of most credit cards, they're really designed to get you into debt, get you to revolve that debt, and then get you to pay 23% interest on that debt, right? And so we looked and said that doesn't make sense. What if we sort of rethought it from the ground up in terms of building a credit card that is designed to get people into financially healthy behavior rather than get people paying a ton of interest. So if you think about what drives our product evolution today, it's really simple. It's people pay us a monthly fee for the app, and we try to make the app as useful as possible, right? It's a very straightforward bargain. And our thinking is if the app delivers value, people will keep it and keep paying for it, and we'll have a successful business, right? So we want to make the app as useful and valuable as possible. But when you are living off an affiliate model, that's not the model, right? Or that's not what's driving the success of your business. All of a sudden, it's not how do we make this the most useful product possible. It's at least part of your thinking is how do we get more clicks on credit cards, or how do we get people to get more credit cards, right? We went out to do a Series B, and just like the Series A, literally everyone in the world passed on us. I reached out to pretty much every firm I could possibly think of, and pitched them, and the graph looked great. It looked, pure exponential graph, 15% month-over-month growth, like clockwork. Never a down month, never a month. We didn't have a single month with less than 10% month-over-month growth. And then it wasn't just the revenue growth. It was, every metric was improving. Retention was improving, engagement was improving, premium conversion was improving, average sale price was improving, but no one wanted to touch it. And finally, we got an inbound inquiry from this fund called Eldridge, who I'd never heard of. And I kind of blew it off and didn't take the meeting. And then they reached out again, and I did take the meeting, and they were just awesome. Like, to this day, they're one of my favorite investors. I can't say enough great things about them. But 20 minutes into the meeting, they're like, "We love this. Like, we want to do this. Let's get it done." And so that was a major lifeline for us and a huge relief.
What would you say is the number one reason why you were able to get $1.3 billion for the company you built, where the rest of the market was getting table scraps or nothing at all, especially considering, all prior to that, you were not looked at as very attractive by investors. So it's like you totally flipped the script. So how did, and I know might sound like a loaded question, but how did you make that a reality? And what do you think is like the single most biggest contributing factor to that?
Yeah. I don't know if I agree that other companies were getting table scraps. Valuations were high across the board.
Well, maybe not table scraps, right? But significantly less. So like 1/10 or less than what you were getting. Now, let me put it that way.
Well, if you're comparing Mint, that was more than 10 years ago. But to answer your question, like when we after we announced it, TechCrunch wrote an article saying like this is way too low. Like, why did this company sell for so little? So, I think you got to look at what rocket companies actually got in the deal, right? They got the biggest, best, fastest growing personal finance app, right? They got really the only personal finance app that can acquire users at scale in a very profitable way, right? on top of that, obviously Rocket Companies, the bulk of the revenue there is, or the largest piece of that business is Rocket Mortgage, right? Which is a very transactional business. You don't typically think of yourself as having a relationship with your mortgage provider, right? Or with a company that you could potentially get a mortgage with one day, right? Well, Truebill, or Rocket Money now, is great at building a relationship with people and delivering them value, like helping them with their finances, right? And so if you have this brand that millions of people use and millions of people really like and say, you know what, they're looking out for my finances, they're looking out for me, they're looking out for my money, then that's a really great thing to have associated with your mortgage company, your solar company, or your loans company, right? Which Rocket Companies has all of those. So I think, we definitely spoke to other acquirers, or other potential acquirers, and the synergy here just made the most sense, and the opportunity of, like, if this works out, where this can go made a ton more sense than anything else. And then on top of that, the business itself it still is super healthy. So, it's not like they came up with this huge number and we said yes, but we would have taken a lot less, or the market was taking a lot less. Like, we had term sheets from VCs, from really good VCs, for that same range of money. So it was not like, do this or we're screwed. We're sitting on a business that we were very, very confident was going to continue doubling revenue year over year. We had a very clear path to profitability. We continue to either create more market or take market share from competitors. Every piece of this business was firing on all cylinders. So, I think, yeah, I don't think it was crazy. I think it actually made a lot of sense.